Now it's time for this for our panel discussion, and we have three distinguished panelists that are going to help shed some light on the issues. The topic of the panel discussion is how climate change hits home, risks and responses for households. And let me briefly introduce the three panelists. So my first challenge is how to pronounce the first name of the first panelist, because it starts with an A and an O on top, and I think it's Åsa, something like that. Knudsen, right? Sterte, Head of Climate and Sustainable Finance at SEB. So in the Sustainable Banking Department. Previously, she worked at Sweden's Ministry of Finance, where she helped shape national and EU sustainable finance regulations. At SEB, her team supports customers in their transition by developing advisory services and sustainable financial solutions. Their work focuses on decarbonization, managing climate risks and opportunities, and using financial tools to drive adaptation in a changing climate. Then we have Gabriel Lundström, head, right? Ström, yes, good. Head of Sustainability at Skandia. He is Head of Sustainability at Skandia and also Chairman at UN Global Compact, Sweden. He has been working in the intersection between business and ESG with both sustainable investing and financing for more than a decade. And then the third panelist is Markus Svedberg, Chief Economist at Folksam. He combines macroeconomic analysis with a strong focus on sustainability and transition finance. Folksam takes part in initiatives such as the UN Global Compact, PRI and the Net Zero Asset Owner Alliance. The work centers on how pension capital can drive the climate transition while supporting long-term household financial security. I was told that the chance of disagreement between them is limited, but let's see if we can spur them into some disagreement. So the way we're going to run this is we start with a 7 to 8 minute presentation by each of the panelists, and then we get together and I ask them some questions to give you time to think of questions to ask them yourselves. Okay, so these are the rules of the game. So maybe awesome. You.
I think
you are going to start.
Yeah,
okay, fine. Pick your turn.
The lucky winner.
Yes. Okay, good.
All right. So 7 slides, 7 minutes, and I'll try to relate to some of the things we've heard previously, and especially the channels that Michael laid out. How households may be affected by climate. Folksam is I think all Swedes know it, but it's an insurance and pension savings company with some 900 billion SEK under management, 40% equities, 40% rates, and roughly 20% private assets. Now, the first channel, I mean, I like to call it the stranded household asset number one, and that's homes. That's normally the largest expenditure for any one family, and as a pension savings company, but also as an insurance company, we focus quite a bit on this. Houses that are and often or repeatedly flooded, they may have problems renewing their insurance due to either the premiums are getting so expensive or that insurance companies no longer offer insurance. This is not the case yet in Sweden, but clearly in the US and other places. And uninsured houses, they may of course have problems getting or extending their mortgages. And houses that are not possible to insure or use as collateral, they may become stranded. And this is of course an enormous problem for the households, but it may also be a problem for the banks or society at large and financial stability. Interestingly enough, it's not a major problem for insurance companies that a lot of people seem to think, because first we have reinsurance, and second, our contracts are only for 1 year at a time, so we can easily get out. Second point, cars. This tends to be the second biggest expenditures for households, and now we're in the middle of a change in cars, going from ICE cars to EVs, and think about this. If you have a regular car like I do with an internal combustion engine, what happens when EVs are cheaper and or more efficient? Let's say they can drive longer on one charge than you can do on one tank, and charging is easily available, or when regulation makes it difficult or impossible to park or drive in certain locations, like city centers, and City of Stockholm has proposals for that for certain parts of the city. So a car that cannot be sold or parked or driven everywhere may also become stranded. Again, this is not a major problem for insurance companies, or not even for the banks or credit institutions, because the credits tend to be short term. But again, it may be a big problem for households, because this is a big expenditure item. So the solution to all of this, well, it's a very familiar solution. We need more mitigation finance and more adaptation finance. And I think the previous two slides is this is not new, and I think everyone in this room know it, and it's been known for a long time. But I think by starting at the other end, by showing what the risks are to individual households, may actually become easier to explain some of these things, why this is important. And we can all discuss, exactly what we should invest in and not invest in. But I think by starting, driving it home to a household may actually help us to overcome some of those information challenges that Michael laid out previously. And politically, we have found that, at least in Sweden, but maybe across Europe recently, it's easier to talk about resilience than adaptation and mitigation, because those are seen as cost. Resilience, both in a defense sense, but also in a climate sense, that is an easier political conversation to have in certain sectors, because everyone understands how important resilience is. And there are important overlaps between the two. We try to educate ourselves and our main stakeholders. We do it by doing things like this, but also writing a lot of op-eds. We're not sure who reads the op-eds, but we keep pushing, and we often write them together with our peers in the industry. And a lot of this is actually reaching out also to municipalities. We invest a lot with them. A lot of the action is supposed to happen in municipalities. We work a lot with them, and also with the state. And we try to also make real investment. This is what gets the investment side of my colleagues really excited, when we can actually do investments. And I'm just going to mention one of them. And I'll single it out because it's one of the one that we're most proud of. We bought a bond by IFAD, the UN agency focused on agricultural development, when they came to the market. And we were joined by Skandia, so they invested together, and it was actually structured by SEB. So that's a good example of how the Swedish financial community cooperates. And the proceeds go to smallholder farmers in Africa for climate resilience and for changing the agricultural practices. So it's a good example of what we can actually do within the current limits. But I'm happy to come back to some of the other points in the discussion. Thanks.
All right, thank you, Marcus. I think it's time for me to take over the word. My name is Gabriel Lundström, hållbarhetschef at Skandia, or head of sustainability or chief sustainability officers. There's many fancy words for that out there. Before I dig into the topic and make my introduction, I think it's appropriate, just like Marcus did, to introduce Skandia to those of you who are not familiar with us. We're a leading pension company in Sweden. Primary product that we offer is occupational pension, but we also provide different kind of health insurances. We are also owned by our customers, in total around 1.5 million Swedish citizens. There are our owners, and in total we have 1.9 customers. We are managing around 860 billion Swedish crowns, so just like Folksam, we're a quite large asset owner in Sweden. And in our traditional life insurance portfolio, we're not only investing or owning listed equities and bonds and so forth. We also have a number of wholly owned subsidiaries, and two of them that I'd like to introduce here today is Skandia Banken, which is a mortgage and savings bank, and Skandia Fastigheter, which is a real estate company. And the reason for me just that I want to highlight and introduce those two is because I think they will be relevant to exemplify with in the discussions in the panel today. But let's dig into the topic of today. We've seen versions of this graph already during this afternoon. As you can see here, the yellow line here is historical emissions on the planet from 1990 up until now. And as we all know, highly educated people in this room, they are increasing. And the red line is the current path we're on with global policies today. So we are going to a warmer planet. And the green line is the path that we have committed to globally 2015 that we are supposed to be on. And no matter what path we take, we can all make a guess, but it will lead to higher global risks in the global economies going forward, no matter what path we will take. And those two types of risks, the concepts introduced in TCFD. How many in the room are familiar with TCFD? Some of you, Task Force on Climate-Related Disclosure. Just because not everyone raised a hand, I'll introduce the two concepts here. If you go to a warmer planet, we will face higher physical climate-related risks, such as the ones that you read about in media, more extreme weather events such as extended droughts, flooding, heavy rains, storms, and so forth. But if we are to take that path, which we are committed to, one of the things that we need to do is to have a rather extreme energy transition. And as you all know, energy consumption and GDP has a very strong correlation. It means that's a pretty extreme maneuver to take that path. And that will lead to higher risks in the economic systems when we go from one type of technology to another type of technology. And all these risks will translate into costs for someone. Example, if we take the higher physical risks, very recent examples that we're actually in the middle of this global warming right now, I would say, is that it has an impact on agriculture and the sort of productivity of that. We talked a lot the recent years about the inflation, but I think we've talked a little bit too little about the underlying reasons for inflation. There are, of course, many factors, but one of them is climate change and the fact that we've had long periods of drought in regions where, for example, where we produce coffee, which we all love in Sweden, chocolate, probably everyone in the world loves, and also olive oil prices. Of course, there can be bad years for a farmer, but the number of bad years that we are facing going forward will be more frequent. And that will lead to higher inflation. That's the price that you and I here in this room and everyone else will have to pay for going that direction. That direction won't be for free either, because cheap energy is necessary for high GDP growth. And just look at where we are right now in Europe. We have a rather, I would argue, fragile energy system. We've been highly dependent on cheap natural gas from Russia, among other things, and we've had climate ambitions and sort of environmental ambitions that also led that we might have not invested so much in, for example, nuclear power and so forth. So we're in a situation right now in Europe where we have to make our energy systems more resilient, both from a climate perspective and from a sort of resilience perspective for Europe's independence going forward. But that won't be for free either. Someone has to pay the price tag. In Europe, it's quite common that we put the responsibility on the states. But if the state's going to pay, who's paying the state? Where do they get money from? That's us taxpayers. And if you go for more of an American model where you invite more private companies to start up more production, well, they will have to get sort of paid from someone, and that will be us eventually. So no matter what path we're going here, we will all be affected by that. And I think these ones here, I think the very interesting discussion in the very beginning of the conversation is that, you know, this trade-off, right, between the climate transition and the GDP growth and so forth, and the conflicting interests here. But even those ones here, even though they will be more harder to calculate, I would assume, the higher physical risk, they will have a price that we all have to pay. And that's something that we need to prepare for. And I'm looking forward to discuss this further with my colleagues in the panel. I stop there. Thank you.
Is it working? So I don't have any slides. I free ride on your slides because you laid the foundation so well. So just also short about SEB. We're a Nordic corporate bank. We have home markets in Nordics, Northern Europe, UK, and the Baltics. And we do corporate investment banking, we do retail and business banking, and also wealth and asset management. And our largest credit exposure is towards corporates. So the household exposure is about 1/3, and that's mainly mortgages. And we have been in this for a long time. We're a 170-year-old bank, and we have this purpose that we exist to positively shape the future with responsible advice and capital today and for generations to come. And this means that we innovate and adapt together with our customers, as we did with climate change. And I have to correct you here, Michael, because SEB was actually together with the World Bank back in 2008, developing the first green bond, because the EIB bond is a climate bond. And this was as a response on the demand from Swedish and Nordic institutional investors that wanted to invest in climate change solutions. And for some years now, SEB has been looking into water. And looking at the previous slide here, we see that the physical risks are getting more and more urgent. And we see water as a kind of translator of these physical risks, because you have the flooding, you have heavy rains, and also droughts. So we really, really welcome that we get more attention towards these risks, because those are equally important. I chose to focus now on the household mortgage risks, because I do think that a large part of at least my personal investments are in my apartment. And I would say that climate risks are not sufficiently integrated into prices today, and households do not know about the climate risks today. And I could say, I mean, you have several different reasons, and I also think it's kind of geographical dependent, because we have a different system in Sweden compared to the States and so forth. But I can see that Marcus picked up on that insurance companies have 1-year horizons. So you have the time horizon and different incentives. We as a bank have 30-year commitments, but we only look at the ability to pay back the loan. We don't look at the underlying collateral. And then another thing is that, you know, land with a sea view is quite attractive and comes with a nice price tag. And as a landowner, public or private, I mean, why do you want to kind of start to explore the potential physical risks in 50 years' time? You just want to get a nice profit today. And also, the physical risks are also often quite location-specific. And the challenge here is to get relevant data that is also accurate. And when you do perform scenario analysis of credit risks, it's usually not affecting the whole portfolio that much. At SEB, we actually did this scenario analysis for Swedish and Baltic household mortgages, and the effects were very small. So, and then it doesn't kind of, you don't really get attention here. I mean, we have sector targets for transition, a lot of sectors and all that, for mitigation, but not adaptation, so yet. But then for the individual, these consequences from physical risks can be devastating. So I think it's really, really important to acknowledge those. But on the positive note, change is underway, at least here in EU. So the European Banking Authority has published some guidelines now on how to integrate ESG risks. And they outline this harmonized framework for identifying, measuring, and monitoring these risks. And I mean, this is not directly aimed to individuals or households. And we don't really know if this will benefit households, but I just guessing here, killgissar, that this will require banks to integrate both the physical risks and transition risks into risk reports and pricing and also lending decisions. And when you also force the banks to provide harmonized information that you can compare, that will also enable households to take part of that information. So that will trickle down. So if I would like to get a mortgage to buy a house and I have a kind of more expensive price tag on that one, and I also need to provide some evidence of adaptation measures, and my friend buying a house at another place, she does not have that, then you realize that my house is associated with climate risks. And this would also lead, I would assume, in the longer term, that it gets integrated into the mortgage market in general. And here you can also get this price differentiation if you have climate resilient homes or if you have more vulnerable homes. And then, of course, you may have negative effects on households, and how to mitigate these effects and our responsibilities as a bank, that will be something I hope I can come back to. So I leave that as a cliffhanger. And I also have a wish list of what I would like to see. Thank you.
Very fascinating, and from different angles and different perspectives, but of course, you know, on the common theme. So let me start a little bit talking about awareness of households and literacy of households, and also what is out there in terms of products. I mean, you touched about, you know, on insurance. You gave me the chills. This realization that these are one-year policies and you can always walk away. I mean, that is difficult. You know what? I mentioned, and what I saw is that for catastrophic events, it's mostly countries that insure and not so much the private sector. But of course, not all countries are so prepared and so forward-looking. So I want to know, what are the limits of private sector insurance? How far is the private sector willing to go to insure, flood risks and wildfire risks and things like that? Yeah.
Well, I would say as long as it's profitable. I mean, and we're mutual companies. We're owned by our customers, so we don't need to make excess profit if you want, but we need to be profitable. But I actually think that this whole discussion about and again in Sweden it's not yet a problem. So I really want to stress that even differential pricing is not really an issue in Sweden yet. But we have a lot of data. We know which houses, individual houses, that are at risk. My sense, and this is not necessarily Folksam's view, this is just my personal, I don't think the decision will be ours. I think the decision is going to be, maybe another insurance company decides to, no, we don't want to do that. We don't want to, and then, that's going to lead to increased prices. Or one of the global reinsurance companies decides we're not going to reinsure assets that are X meters or kilometers in areas like that, right? And then it's going to be an arbitrary, and if we can't get reinsurance, it's going to be very difficult for us. And again, we only need to look at the U.S. for a very developed market, right? And the further out you go in I mean, there was a previous session on blended finance in emerging and developing countries where, the insurance coverage is really low to start with. So I'm sorry not to be more upbeat, but
no, absolutely. I mean, what is the in the U.S. I saw with wildfire, with floods in particular, the share of private insurance is of the order of 3.5% to 4.5% of the whole market, and the rest is the national schemes. I mean, is this comparable here in Sweden?
No. In Sweden, we have one of the. I don't remember the number on top of my head, but the private. I mean, we've talked about households or houses. The insurance coverage is one of the highest in the world. So it's very, very high, and it's private or mutual insurance companies. So it's very, very high. And I've been writing a lot about this, but I point out that Sweden is, together with the other Nordics, we are one of the best places on the planet to be, because we're going to be less impacted by climate change, and we also have a very high insurance coverage, right? So and I've been talking to the central bank about this for financial. I don't think this is going to be a financial stability risk in Sweden, in the very near future. But I do think it's and as also touched upon, it's a big issue for the households that are affected, right? And then probably the state, the public, has to come in one way or another, just like it has come in, but on a bigger scale in other markets.
So I want to go to the bank aspect and to the mortgages, etc. I mean, one way, of course, to encourage people to insure is for the bank to require particular types of insurance, and then to alert the individuals that when they are buying a high-risk property, they have to get adequate insurance and stuff like that. Do you see this already happening? That the bank is really alerting people, to the climate risk or the environmental risk of the properties that they are buying, and is it requiring them to get into more insurance? Is it adjusting its terms sufficiently to this climate risk, or is there more room? Yeah.
No, I think. Oh, I speak so loud. That's why I am so glad that we have these EBA guidelines, because I think this is going to change, because that means that we need to ask ourselves, is this a loan that we want to give, given this house and the risk associated? Would we want to give this loan with some higher price? Or would we want to give this loan with some certain conditions on resilience measures? And I mean, we already have green mortgages at SEB, and that is conditioned on certain energy performance standards, so energy efficient home. We have also loans for promoting energy efficient measures. So I see that if we also start to take into account physical risks, we will also require that they will do resilience measures, so adaptation measures. One challenge here, though, is that it's not always that I can fix my own piping in the basement to avoid flooding. My neighbor needs to do that for me, or even the municipality. And then the municipality is kind of downstream, so it's actually the municipality upstream that needs to do the measures. So I think this will, hopefully, when we start to get the price tag, thanks to these guidelines, because insurance companies and we need to start to price the different risks, that we also can involve the municipality and perhaps the government to do these measures. And I mean, you have a lot of benefits of building flood protection upstream, because that help you as well. So, and here we can see also avenues for kind of partnerships between the public and private.
No, just a short comment on what Marcus has said previously, and I think I agree with the fact that the insurance risks is not going to be a huge problem in the near term in Sweden, but globally, yes, in many areas of the world, and we see it already. You mentioned US. However, we have some examples already that will most likely happen more frequently in Sweden. Gävle a couple of years ago was one example where there are still sort of twists between, or the discussions and disagreements between who's to pay. Is it the private individual, which is always responsible for taking care of sort of my house and make sure that that's climate resilient in the end? If I have a basement, is it the drainage properly done and so forth? And then it's the municipality, as you mentioned, right? Because we know that we are not having a very resilient water system, very old water systems in Sweden all over the place. So sort of the rising sea levels I'm not that worried about, but the increased frequency of heavy rains might be a real issue. And I think people are not really aware of this, especially house owners. And I think municipalities doesn't seem to have prepared for that enough, and it's very hard to predict where it will happen. Gävle was one very clear example, but it has happened on other places as well. We also had a situation recently when the railroads were hit in northern Sweden, and that will happen more frequently. When it comes to mortgages, I think I'm not particularly worried, at least for the insurance companies' sakes or the banks' sakes, because they have huge portfolios. When it comes to the physical risks, but when it comes to transitional risks that are related to our sensitive energy systems, I'm more worried, because as far as I'm concerned, most banks are not considering the fact that there are huge differences in energy consumptions between different houses. And we noted, I don't know, was it 2 years ago when we had extremely high prices in Sweden, where a lot of people struggled to pay their energy bills. And that is something that is not affecting, as far as I'm concerned, at most banks, the sort of your risk profile. It's a risk profile when it comes to the sort of cost that you have in a household, which is same for everyone, more or less. And going forward, I think that that's something that banks will consider to a larger extent, because we have a fragile energy system in Europe.
Michael, can I add, if I promise I add a positive thing? Yeah, so there's a nice loop, or potential loop, right, on this. So we want municipalities to basically do more water and wastewater infrastructure work. Right? In order to do that, they need to borrow money. So they issue bonds, mortgage bonds. We buy the mortgage bonds. And we actually get better paid to buy the mortgage bond than to buy the sovereign bonds. So that's what we get a pickup. So we buy the mortgage bonds. And then they do the water and wastewater infrastructure work. And that means all things equal, there's going to be less flooding. So households benefit. And the households, our customers are the households. And we're also going to get less insurance claims because there's going to be less. So there are possible to actually get a positive feedback loop here. But a lot more needs to be done.
Yeah, I mean, as you're speaking, okay, granted it's positive what you just said, but as all of you are speaking, I'm thinking, about the wealth distribution issues as well, because, the poorer people are more likely to be going to the higher risk areas where prices are depressed. They can afford, these insulation measures and energy efficiency measures. There is this statement that it's costly to be poor, it's expensive to be poor, etc. Are the banks, worrying about this? Are they thinking about this, or is it just a matter of, pricing to the different risks and to the different incentives? Is there anything that can be done about, that distributional aspect, or?
Tough question. I think in Sweden we do have a relatively well-equipped social security system to try to protect the weak, but of course it's always going to be challenging for financially stressed household. But on the energy efficiency terms and so, those are loans that we price more advantageous, so they are supposed to be able to afford them. But then, of course, if it's a household that is not deemed sufficiently enough for credit, then it doesn't matter if they would like to take such a loan.
Well, I think the core of the financial industry that everything we do is risk based, right? And then it's hard to get away from that logic simply because that if people are more exposed to sort of for example, if you give a mortgage loan to someone, if their ability to pay back the money affects the price tag, and that's hard to get away from. And well, on a positive note is that maybe poorer people don't live in houses, they live, and houses are more exposed to climate risks. But on the other hand, even sort of block houses needs to adapt to climate change, energy efficiencies, and that might affect the rents of houses anyway. So it's hard to get away from that logic, unfortunately. Do you have anything positive to say, Marcus, on that on that note?
Well, I think that this one can be. First of all, I agree with those. The quality differences in Sweden are less than in many other places of the world. But this is also something you can easily solve with subsidies if you want targeted subsidies if you want. So let's say for installing resilience measure in your basement, they're not that expensive to start with, but you can actually the cheapest thing, and you should all get it if you don't have it, is a reflux vent put into your basement. It costs like 75 crowns or something like that. But you can have targeted subsidies for EVs if you want. So there, politically this is fairly easy to solve.
Yeah, I think the message is don't expect the private sector to do this. I mean, this is grounds for social policy and intervention in the welfare systems. Let's go a little bit to financial literacy and financial education issues. And here, you're all from sort of the private sector, and you all have, I think, a vested interest to have informed customers. There are some people, and some institutions out there that are trying to distort things and to take advantage of ignorance of individuals, but I don't think this is how most of the financial sector is thinking. But the question is, you also have your own incentives. You know, first of all, what do you think is the role of your institutions in educating your customers? What is the credibility of your institutions? Do you have enough trust? I mean, do the customers have enough trust in you to be interested and benefiting, you know, from these things? And what kind of measures have you taken, if you have taken any so far, to move in that direction? So maybe you start, Marcus.
Well, there are surveys of this, but I do think we have, and not only us, but the industry, a fair amount of trust, and also view that we care about climate and sustainability, and it's not, you know, a trend or something. It's a core belief, and I see that across not only Sweden but the Nordic financial industry. This is for real. And I think that is clear. I think we have a big challenge in explaining our conviction to a general public in a way that is digestible. It's very easy, and it's not only about this, but also when you work with something every day, you get, you know, it's lingo and it's, you know, processes and so, but explaining it so it's understandable and relatable. I think that is a big challenge, and that's why I was happy that you actually picked the household angle here today, because I think that is very important.
I think I don't fully agree with the fact that people are sort of have 100% trust in the financial industry. I think in general it's sort of met with a lot of skepticism as well. It's easier for an actor like us which are customer owned, I would argue, but still, you know, we have a job to do there. And of course, educating our customers is, I would say, key in order for them to take good financial decisions. And I think from that perspective, we're on the same boat as our customers. But as I mentioned in my initial speech, I think we are not talking enough about, we talk a lot about inflation, people, economists and so forth, about the inflation and price hikes and how that affects private individuals. I think we talk way too little about how climate change is playing a role here and will play a role no matter what path we're going. People seem to think that it's expensive to do the transition, and yes, it will be, but it will be very expensive to not do the transition as well, even though it may seem more abstract. And I think those things we can play a key role as well, as we are in the middle of this and we are managing risks. That's our job. So I think we can do more there.
I think we do have a very important role, each one of us, given the regulation. I think regulations are really important to kind of say what information you need to provide to make comparisons. But then if we do have the regulations, like you need to make sure that if you give financial advice, that the person understands the risk and also the kind of level of sustainability. And I see it a little bit like when you go to the doctor and the doctor asks, so how much does it hurt? And if I'm a tough one, I may say 2, and if not, a 6. And if I sit and give financial advice to someone and ask, how much do you care about risk? How much do you care about sustainability? It's not super easy to kind of get perfectly right. So even if you want to get it right as a financial advisor, because I mean, we have an interest to keep the customer, and then we only keep happy customers. So I think, of course, there are challenges, but then I also know that you are trying to improve. So internally, we try to educate the financial advisors and provide them with tools to ease the discussions. I think all banks and insurance companies are kind of struggling with this. But of course, we have a responsibility to try to make it understandable.
So I guess a follow-up is, you know, I mean, you mentioned also green investments and green financial assets, etc. I mean, to what extent are your customers aware of these products, can manage these products, are happy with you holding, these products, etc. What has your experience been recently, I guess? I don't know who would like.
If I can comment on that, I think overall people are not in Sweden. I mean, I think we have a high penetration of people actually investing in stocks and so forth. So we're quite unique in that sense. But despite that fact, most people are not very interested in their pension. They have other hobbies and interests, which I can relate to, even though I find it unfortunate. So of course, these kind of questions are very tricky for them. And I think media has a key role there in driving sort of the public opinion on this topic. Very clear, we've seen it when we are investing in more green investments. A couple of years ago, we were applauded. Now it's met with skepticism simply because of the fact that they've heard that there are some unprofitable investments in the north of Sweden. So then everything that's green is probably bad investments. So of course, we are. That is up to us, right, to try to explain that, the logic is not that simple. Just because it's green, it's a bad investment, or the other way around either. It's same with fossil. You can make money on investing in fossil. You can make money on not investing. Well, you can do other investments as well and make money. So that's that's a tricky role to explain to customers that are not particularly interested in pensions, and then to try to explain, how this logic works. But and I don't think the regulations that we had made it more simple for the customers when it comes to the fact that we are now legally required to explain to customers how this works. Probably you would agree with me that the level of technicality and how you are to explain that, it's even tricky for a financial advisor to understand that. So, I mean, if that's the starting point, you can imagine how easy it is for private individuals to grasp these concepts.
So if you had one, very concrete policy change or industry change to propose to make households more financially resilient in the face of climate change, what would that be? So I don't know who wants to start.
I can start because I actually wrote down a wish list yesterday. So. Yes, so I would like to see this one-stop mortgage information hub in collaboration between the public and private when you get the mortgage. So when you get the mortgage, you can get the kind of information about the energy performance and also the physical risks, the hazard risks about that. And as a bank, we can then give some discount for that. And this will also be mirrored in the insurance premium, so it would be the same. And then also that you get discounts for upgrades and similar for the insurance premium. And the municipality, they provide the map on risks and all that. And they would also provide with, this adaptation measures that is needed, that you cannot do as a household owner. And then the government makes sure that the standards are equally, and also when the municipalities cannot come in, the government kind of points to the municipality that you need to do these measures because this other municipality will benefit. And this requires this really close collaboration with banking and insurance, so you get the kind of the same data for performance standards, the risks and all that, and that you also have this database. I mean, MSB in Sweden, the contingency agency, they have these maps already, but that you get everything in a kind of nice dashboard for free, and it's not going to be kind of owned by any bank with an interest. It's going to be kind of run by perhaps some stakeholder organizations. So that would be my wish list.
I would like to take a different perspective, and that is sort of the private economies of the households. And I think for us as Swedes, and especially us as Europeans, one of the most important things we can do is make our energy systems more resilient. And there we have, I think we can be positive because there are a lot of efforts from the European Union. Because it all boils down to, if we want to make our private individuals' economies resilient, we need sort of stable energy markets in Europe and good cheap energy, which is preferably also clean. Otherwise we'll have to pay the price of sort of fiscal risks and how that translates into our wallets as well. So I think it all boils down to that. So sort of less politics around it and more agreements that, you know, this is the path forward across the border of what political spectrum where you are on the political spectrum.
Well, I had most time to think, but I was gonna say something about, you know, economic incentives, but my colleagues, you know, were much more detailed, so I'll just second whatever they said.
Okay. Okay, very good. So thank you very much. We hope to have contributed some thinking.